Hey everyone, the Motivational Professor here. We are going to be breaking down these trades on the screen that we gave our members inside of our members area. I am currently traveling on a little mini getaway vacation in beautiful Hermosa Beach, California, here to watch our Miami Dolphins play the Los Angeles Chargers this weekend, and also celebrating my youngest birthday as well. So again, I will be breaking down this chart right here, taking a look at why we took our trades in these different areas. Congratulations to our members who took a buy here. Congratulations to our members who took the initial sell here. Congratulations to our members who ended the day taking a sell here, and then also second and third positions here as well. So we are going to be breaking this down on this video, and as we always do on a full Sunday analysis, we're going to look at the weekly, the daily, the 4-hour, and we're going to walk it down and give you some trade setups just like this at the end of the video to start the week off right. Are you ready? Let's go ahead and get into the analysis. Okay, so we are going to be coming back to these zones, but right now let's go ahead and clear the table. And I'm actually going to get rid of everything, and I want to go ahead and start on the weekly chart. And I want to kind of start there for a couple of different reasons. And so again, we're going to kind of bring up this weekly chart because I want to be able to give you that value and things to think about as we move forward. Now, the first thing we want to do on this weekly chart is we want to go ahead and throw a Fibonacci ratio from here down to this low. Okay, and the first thing that stands out is, as you can see, right, price is kind of in this, let me grab an arrow, price is in this 78.6 area. And as of right now, we obviously saw a little rejection up in this area. So we want to kind of keep that in mind as we move forward, because again, these are going to be strong areas of support and resistance, even though we are looking at the weekly. Now, the other interesting fact is that, yes, this past 2 weeks, we did close above these highs here. So based on price action, right, we moved higher. And then are we going to reach the 88 or the 100%? That's one of the things that we all don't know, right? There is a lot of pressure to maybe continue raising oil prices by the big people that are in charge of the petroleum. And of course, if you're in the United States, there is going to be pressure to keep oil prices down for election and governmental purposes. But regardless of the fact, we are going to trade what we see versus what we think is going to happen. So that's kind of like the weekly look there. So now what I want to do is I want to leave that Fibonacci level, and I want to go over to the daily chart. Now that we are on the daily chart, we're going to kind of start this analysis here because there's a couple of interesting things that sometimes we don't pay attention to. I'm going to kind of grab my arrow. Number one is, for the past 4 days, we've seen 4 days of wicks. So that tells me on the price analysis side that right now, just based on what we're seeing with price action, okay, it does not appear that price wants to go any higher, because in the last 4 days, we have not been able to close above those wicks areas. So as we look at the analysis here, we're going to kind of keep in mind that every time we've gotten to about this 87, 90 or so, we've kind of been stuck here. So now we've had an up day, a down day, and an up day, but really in this consolidation area here, which again lines up with this rejection of about this 78.6. Please keep in mind that zones are never an actual line. So we have to kind of look at this area right in here. There's going to be an area that we are going to be talking about. As I grab my arrow, then you can also see that the next fib level at the psychological number of 82 gave us this area of resistance here, and then also provided areas of support and areas of resistance. So we know that's a good area. And then coming down to the psychological level all the way down at about 78.50, same thing happened here. Now, when we use these higher time frames, then obviously the levels are going to be much greater in length. As we move forward and as we move down, right, the levels are going to get smaller, but we're not going to keep the same Fibonacci level because Fib levels are made at every different time frame. So when we're looking at the weekly or we're looking at the daily, obviously the price gaps are going to be larger because the Fibonacci levels are larger in size. They're not going to be 20 or 30 points. They might be 200 or 300 points. But it's also important to know those levels on the higher time frame. That's why now what I want to do is I want to kind of go back to here and I want to mark up these levels, and these are going to be weekly levels, okay? And these are going to be important to remember. And I'm going to keep my weekly levels here, especially for right now, okay, with the white boxes. So I know that white means that these are weekly levels for me, okay? So there's going to be levels within levels, but again, we can't ignore these weekly levels. Now what I want to do is, and I'll go ahead and mark up this one more down here because obviously we're going to be working from here moving forward, okay? Now what I want to do is I want to drop to the 8 hour, and I want to just continuously look here. I don't need the Fib levels anymore, so I'm going to go ahead and delete the Fibonacci levels because I'm going to be working off of these areas right in here. So this is just a quick and easy way that you could establish your zones using that weekly and daily method that I just showed you. So if you want a specific video where I can show you how to do this, not only on crude oil, but really on other pairs like gold, SP 500, the NASDAQ, US 30, and others, go down to the comments below and type in Fib levels. And if I get enough people to comment Fib levels or Fibonacci levels, I will create a standalone video to show you how you can easily do this with another method that I have called the line chart to make it much easier for you, even if you are brand new to trading. So go down below and type in Fib levels. And if we get enough people, I'll definitely do a video for that. So as we look now at the 8 hour chart, again, interesting here that we see this rejection. So you can see here that, again, this 88 area is just having a hard time breaking above. Because if we do break above, then we're going to go up to 89 or 90. So that's going to be the first clue. If we do close up in here somewhere, we are going to go higher. So for right now, we are just kind of consolidating, right? Up, down, up, down, up, down, up, down, even on the 8 hour time frame, right? So we are going to be looking at that level, and then we're also going to drop down to the 4 hour. So you can kind of see what is happening on the 4 hour. This is where the multi-time frame analysis begins to kick in. Again, are we just going to consolidate now for a little while here? We don't know. We need to see what's going to happen as price opens up with the Sunday market open. But it gives you a visual. If we back this up, and a lot of traders don't spend the time doing this, right? If you back this up, you can kind of see how price is coming to these different levels. Now, the other thing I want to add to the chart now is going to be the 50-day moving average. You've heard me talk about this, and there's a strategy that I will be sharing in our members area on how to trade with key zones and the Fibonacci level. This super simple strategy that, again, I'll be sharing in our members area will always create an opportunity for you to get in with almost zero risk and win about 90+% of your trades, if not more. Okay. So again, if you're a member, again, thank you for being a member. Thank you for your trust. And we'll be doing a specific training on this coming up. So we always talk about the 50-day moving average. And again, the area of value, good points to exit and enter, depending on whether we are below the 50 or we are above the 50-day moving average. So now that we have price in this area, right, the question is, do you really want to buy price when it's here? The answer should be no. You should be looking for price to come down more towards the 50-day moving average. And we're going to be giving you some intermediate zones here on the 1 hour in just a minute before looking to buy or sell. But we just know that we are in a strong area that's been resisting price over the last few days. And you have to understand that so you don't get trapped in thinking you're going to buy here and then price drops all the way back down into the low 80s. So that's kind of where we are at now. So as we go now to the 1 hour chart, now we can begin to see price action at a smaller level. At the same time, what the smaller time frames allow you to do is to now create those mini zones that are going to be used as support and resistance to help you scalp the market. I'm personally a scalper, so if you're a swing trader, this may or may not apply to you, but most people are coming in here and trying to make some money and then getting out of the market, which in my opinion is the right thing to do, especially on a commodity like crude oil. So as we get back into the chart, we want to establish some areas where we're seeing price bouncing and rejecting. So right here, we are definitely going to mark that up because we can clearly see here that price has rejected and worked as resistance, and then resistance turned into support. So that is a good area, right? On the flip side, we saw resistance, we saw resistance, we saw resistance. So now that we understand that we are in this consolidation pattern, right? I think everyone can see it. This has been our highs and this has been our lows. So we are going to work within these price points until price action either closes below and heads down or closes above and heads up. And that's what we are going to kind of look at. So we are going to label this right here as the gap. This is where price closed on Friday. And so price will usually come back and close that gap. And that's about 87.18. Okay. Price closed at 87.18. And so we're going to kind of make this a little bit bigger. I'm going to get rid of this because I want to drop down now to the 15-minute time frame because I want to begin to look at some possible entries to be able to scalp the market depending on what the gap does. So we understand that we have some micro levels here on the 1 hour, and then we understand that we have this higher area as well that's kind of rejected. And what I'll even do, for those of you that are visual, I'm going to kind of put this aqua line here to see that we do have these kind of highs in this area. Again, remember that the white box was that weekly area of resistance. And again, as we talked about it a minute ago, the white box are areas of support and resistance on a weekly time frame. So the gaps are going to be much larger. So when you do see a big price difference, right, between 87.72 and 86, that's about 100 points. Understand that within these levels, there are going to be smaller levels, and we're going to break those down for you here now as well. Things that you have to consider. So now let's go ahead and drop some 15-minute micro levels for you so you can see that price may go there and may reject or may bounce off because these are some of the different micro levels and you don't want to get caught, right? Especially if you just want to be able to scalp the market. So the first thing that stands, and I see here as we look at this is, again, we don't know where the price is going to open, but we did close below the 50-day moving average, and we are coming off this micro level here, right? And so now that we kind of take a look at this, let's take a look at what happened here when we had this quick push up, okay? And for that, I'm going to grab a Fibonacci level, and I'm going to go from here to this high that we created here. So if you're brand new to Fib levels, right, this is where price took off. That was our low. And then it rejected here and came back down. If you look here, we came pretty much right down to the 78.6. We rejected before going back up to this level. Okay. Now I'm going to get rid of that Fibonacci, and we're going to do the exact same thing with this price action. Okay. Just so you can begin to see how you can also use Fibonacci on the smaller time frames to look for possible quick reversals. So here we are. Oops, let's drop that there. Okay, so here we are. We are approaching the 78.6. Now, that may not mean much, but again, for those of you that are looking for some scalping opportunities, this is the area that you would look for. And we also have a micro level on this blue line right here. So it would be to the point where if we don't, gap lower, you would be looking for a possible bounce off this area, okay, to possibly bring at least price back up to the zone, which is right here. And again, we'll be talking more about this as we kind of break this down in our members area. That's one of the perks that you receive, as a member, that you get the opportunity to also chat with everyone else. And I'm giving you updates throughout the day versus just one video at the end of the week. So you can see it. You can see it scrolling down below for $5 a month. It's a cup of coffee. You join our members area, give it a try for a few months. And if you're going to get a lot of value, you're going to make your $5 back guaranteed. But if you feel this is not for you, then you can just take back your $5. So anyways, we'll be talking more about this. But again, just something how you can use fib levels at the different areas. Okay, so that's going to be our gap. And as always, we need to see what price is going to do. Because as we kind of zoom out on this 15-minute chart, we can clearly see here, this has been an area that has not been able to close. If we close above 88.05, we're going to go higher. Okay, so let me just bring that down. If we get a candle to close, and let's grab a box here to middle of the candle. If we get a candle to close up here, okay, we'll make this green for bullish. If we get a candle to close up here, we are going to go for sure up to first 88.50 and then 89. Okay, if we get a candle to break and close up here. So you'll probably see a candle close, retest, and then continue moving forward. So I'm actually going to draw that now as one possible option. We see price come up, retest, and then continue moving up towards that 89. Okay, so that's the scenario to the top side if we get a close to happen. Okay, in the meantime, we're just going to see what we have here, whether we're going to go higher or we are going to go lower. So as we look at this, we first need to wait to see what is going to happen with the gap, right? If we gap higher or we gap lower. As always, if we happen to gap down, right, in this area, and we're going to go ahead and turn that red, then we are looking for price to come down to an area of support and bounce up to close the gap. Okay, that's the first scenario if we are going to have a huge gap going down. Now, let me make a quick note that we talked about in our members area. For me personally, there needs to be a 30-point difference for me to trade the gap. Meaning if price is at 87 and it gaps down to 86.70, that's a 30-point difference. I will risk a small position to get into that gap trade and hold it until the gap is closed. If the gap is 5 or 6 or 10 points, for me, it's not worth it because it'll probably close within a few seconds. Also, spreads are something for you to consider with your broker. When the market opens at 6 p.m. Eastern time, spreads are usually doubled, tripled with some brokers, unless you're trading in the futures market. So don't get caught in a 14, 15-point spread because you're going to lose out on that scenario. Wait until after 7 p.m. Eastern Standard Time. After the first hour, usually spreads come back to normal for crude oil. And again, every broker has a different spread. I use a broker that in session, crude oil has a spread of 1. And I'll put that link in the video description as well if you want to check it out. In my opinion, it's an awesome broker, especially for crude oil, a spread of 1. Outside of the U.S. session, maybe 2 to 3 points is the spread. The only time the spread is higher is when the market first opens at 6 p.m., the first hour. Then you might see a spread of about 7 or 8. That's why I wait the first hour to get into crude oil on a gap if the gap is larger than 30 points. So that could be one scenario there, okay? And let me delete that line. If the scenario is opposite, that we do get a gap up here, okay, and I'll turn that green just for visual purposes, then we're looking for the opposite to happen. Price to maybe come up to this area and then come down to close the gap. So that is kind of the scenarios that we are looking at when it comes to crude oil. Again, if you can see here, we have been ranging. Crude will have to make a decision on what it wants to do. And I think that major decision will happen this week. Once we break out of this consolidation pattern, we either have to go higher or we're going to come down lower because there is liquidity sitting at about $83 a barrel, even on this trading view price. And again, always compare my charts to what is happening with your broker. The price action will normally be the same. What's going to be different is the price of the crude oil. It might show 87 on trading view, but maybe your broker's 86. So the point value will be different, but the charts and the price action should be the same. So that's kind of my perspective. I'm going to kind of wait and see. For now, I'm going to be trading within those ranges that I just showed you here. These are really the key ranges that you should be looking at, between 88 and 86, right? That's a huge 200-point area that until price makes a decision in one way or another, we have to continue trading between these two blue lines, okay? Between these two blue lines. And I'm just going to grab a, let's just grab a trend line here. So between here and here are really our areas that we are trading, right? We're trading within that gap area. So for now, until price closes below 86 or above 88, that is really the area. And this is why we were so successful this week, scalping these different areas, doing smaller Fibonacci levels, giving you zones to enter. And again, this is why so many members keep saying this was such a profitable week, such a consistent week, because we were trading small chunks within this 200-point area. So again, members, you will be updated. I will be getting back from vacation on Tuesday, but again, we'll be updating you as we move forward through our private chat area. Okay, I hope you got some value. If you did, you can definitely smash the like button below. Again, I'll put this chart up one more time for you to see it. And if you got some value, you learned something brand new on this video, you can definitely show your support by smashing that like button. And if you're brand new, subscribe, turn on your notifications bell, because that's what lets you know that I did a brand new video. I'm going to try my best, obviously, once I get back home from vacation, to do 2 videos a day, possibly, meaning a morning wake-up call review or an early morning review. But if I can't get the morning one in, then I'll definitely do an end-of-day analysis. So start looking out for that video around 7 p.m. Eastern Standard Time. I'll review what we did for that day, and then I'll give you some possible opportunities that I see in the market as we move into the next day as well. So again, thank you for your support. We just crossed 19,500 subscribers. I appreciate you for watching videos. I appreciate you for liking videos. I appreciate you if you comment on videos. I appreciate you if you share the videos. And to all my members, thank you enough. I know it's only $5 a month and not doing it for the money, but I do appreciate that you have at least that much trust to come in, learn something, share. And again, we're seeing so many people sharing what they're doing, even outside of crude oil. We've got some awesome stock traders in our group who are giving out stocks to buy for those that are in the stock portfolios. We have people trading the indices, sharing their charts. And that's really my goal of this, is to get you to come in, build community, and kind of grow your portfolio, not overnight. Don't hit a home run, right? But grow it steadily so you can be doing this 6, 7, 10, 15 years down the road. Never quit your job unless you have supplemented the same income from your job and you want to do this full time. Use your job to give you the money to be able to have an account to trade part-time until you can flip that account and make the exact same money you were making in your full-time job. Then you should maybe consider it. But in the meantime, learn, grow, and that's kind of my mantra moving forward in our members area. Unite, learn, and succeed as we move forward. Thank you so much for watching. I'm going to get back to the beaches of Hermosa Beach, California. Enjoy the football game tomorrow and then travel back home. Thank you so much, and I'll see you on the next video.